Hello and welcome everyone. Happy 4th of July. Hope you had a good time. I'm happy that the markets are open. We can do some trading today. The market is slightly down. I think Powell is doing a speech today, but we don't really care much about it. The markets can move up or down afterwards. Doesn't really matter. And what we're gonna do is take a look what we have available here. Is there something we should close? And we generally look at the naked puts, which we can see here. 88% profit, 84, 86. All of these would be available for closing because they're over 80%. And generally for these trades, we need 80% to be happy. If you take a look at the trades right here, the way we open them allows for closure after 80% profit, as you can see here. So we only spent 25% on the PDS, so we could be closing those. Now the question is, should we close them? We're probably going to put on another trade today, and but no more than that, just one. And given that the theta is pretty low, it's really on the low side. I would consider 7.7 to be kind of a bare minimum. I think we might just let those go for a little bit longer, even if tomorrow we have to close them with a little bit less profit. That's fine. We should be okay. So let's take a look at opening a trade, shall we? Most likely we'll have to go to the 86 days because in 72 I already took a look earlier. Our 9% is giving us 1850. We would prefer to have a little bit more. So let's go to 86 and see what we get here. So, all right, it looks like we could get around 20. So let's go ahead and try and do two of them. Let's see if we can get that. Bid price is moving on us. So we'll see. We'll lower it a little bit and see if, let's see, it's 20. Okay, we filled at 20. Now we have to take a look at our little chart here. We had this one at 86, right? So if you take a look here, 86, we are looking for closest to 49. So what do we have? Closest to 49, between 44 and 57. 44 is the closest one, right? So the difference between those two would be 86 to 44 gives us 42 days difference between the PDS and naked puts. So and we go to column number 3, where we look for a difference. It says 42 right here, and that means we should be spending around 14% on the PDS. And if you can take a look here, 40 times 14%. So we should be looking just short of $6. So let's try and see. First, let's take a look at the strike here. That was 39.75. So 39.75. Let's go around here and start from here. So minus 40.90 minus 300 would be 37.90. 37.90. That should get us in a ballpark, but no, we are a little bit too. Let's go to 37.70. Make sure that we're okay. We're still slightly over. All right, 30.60. 60. That sounds good. Let's see if we can buy that. We might have to up just slightly to get it closed. Okay, so it is technically 560, but that's, just so long as we're close to that, it doesn't really matter. It's not a huge difference, right? All right, we're finally filled. All right, so that's the trade recorded. Looks like we spent about 15% on the PDS, which means we can close this trade when it reaches around 70% profit on the naked puts. That's all, and thank you very much for watching. See you next time.